The stock market just refuses to go down. Last week, we got a new CPI report, which came in hotter than expected at 3%, when the expectation was 2.9%. The next day, we got a PPI print, the Producer Price Index, which also came in hotter than expected at 3.5% compared to 3.2%. Now, let's put this into perspective. In September 2024, the annual inflation rate was 2.4%. In October, CPI came in at 2.6%. November, 2.7%. And last month, we had a print of 2.9%. And this month, 3%. So it's safe to say that based on the last 5 months of data, inflation is ramping higher. And that's probably why you've seen higher prices for eggs at your grocery stores. Now, despite this negative economic data, the stock market doesn't seem to care. Sellers had every reason to take the market lower with this recent data. And not just with this news. We had the DeepSeek scare, not one, but 2 tariff scares, and yet the market has failed to hold a lower low and take prices lower. Now, if we take a look at the S&P 500, we can see that every negative catalyst has been met with buying pressure. We had the gap down here back on Monday, January 27th. We had the next gap down the following week following the first tariff news. Then we had that bearish engulfing candle last Friday when we got the second tariff news, only to get a gap up that following Monday. Then we had the next negative catalyst, which was CPI. And you can see after every single one of these negative catalysts, the market has only rallied higher. Every negative catalyst has been met with relentless buying pressure to the point where the S&P 500 made new highs on Fridays. Now, if we take a look at the Nasdaq or QQQ, we can see the same thing. We had a gap down for the DeepSeek news. We had another gap down during the first tariff news. And then we had the outside bearish engulfing bar last Friday, and we gapped up from the close on Friday just to continue higher. This was the CPI candle that met with the gap down just for it to rally that day. And now we see that QQQ is heading to all-time highs. If we take a look at the VIX, the volatility index, which we know is an inverse relationship to the market, every gap up that occurred has been met with a sell-off. We had a gap up here during the DeepSeek news. We gapped up during the first tariff news, sold off. Then you see that we created an outside bar to the downside during the CPI print, ultimately for us to trigger a 322 continuation. And if we look at VIX back on the monthly candle, we can see that we are almost about to trigger a 312 down on the monthly time frame. Now, we know if we trigger a 312 down on the monthly time frame and we go in force, that should mean that the market should continue to rally. Another thing that I want to point out for the VIX, there are a couple of gaps to the downside that we have not entered yet. If I were to unhide my gaps, you can see that we have 3 gaps to the downside. A gap from 1459 to 1427, a gap from 1399 to 1380, and the last one from 1324 to 1276. As long as VIX continues to want to fill these gaps, you should see upside for the stock market. Now, one of my sectors of interest that I'm going to be paying attention to for the next couple of weeks is actually going to be XLK, or the technology sector. As you can see, we are full time frame continuity to the upside, but we have not reached all-time highs yet. If you look at XLK on the weekly time frame, we close as a long bullish candle to the upside, possibly setting up for a 322 continuation on the week. We know we have new 2-week candles going into this week as well. If you look at the 2-week candle, we are currently setting up for a 2-2 reversal after completing a long bullish candle to the upside. If you look at the 3-week, which are also going to be new candles, we have a 3-1 setup going into a new 3-week candle, possibly setting up for either a 312 up or a 312 down. At this current moment, it looks like we'll be triggering that 312 up, but of course, we'll wait to see what the market wants to do. Now, the reason why I'm going to be looking at XLK is primarily because of NQ and QQQ. I was looking at NQ on the 4-day time frame, and I was noticing these higher low wicks that we created prior to us breaking out last week. And also, if you look at NQ on the weekly chart, we finally got that candle close above that supply zone, and we can see that we have been rejecting this level 1, 2, 3, 4, 5, 6, 7 weeks, and we finally got it close above. I'd like to see that continuation this week to see if NQ, QQQ want to reach their all-time highs. One sector that I might be interested to play some downside setups on is going to be the healthcare or XLV sector. If we look at XLV, we are currently setting up for a candle color reversal pattern to the downside on the week. If you look at it on the 2-week chart, we're currently a shooter on the 2-week, possibly setting up for a 2-2 reversal. And if you look at it on the 3-week, we also have a shooter possibly setting up for a 2-2 reversal as well, with the 2-week and the 3-week entries being at the same level, which is going to be below 144.80. So let's see if they want to fill this volume imbalance or this gap, and let's see if we get some relative weakness in the healthcare sector. What about you? What sectors are you going to be interested in for the rest of February and going into the month of March? Do you think QQQ will be reaching its new all-time high? We'll find out. Let me know in the comments. If you found this video helpful, make sure to like, comment, and subscribe so you don't miss out on the next lesson. Thanks for tuning in, and I'll see you in the next video. Keep grinding and keep learning. Peace out.